Hello friends, today is my 18th presentation for the team of corporate finance and accounts functions, and the subject is risk protection for 18 types of insurance policies for various industries. This is my overall 49th presentation considering all the YouTube presentation which I have made so far. What I plan to include in this presentation are 6 points. One, what are at risk in the organization and who are at risk in organizations. List of 8 activities for deciding which type of insurance policies to take. List of 18 standard insurance policies common for most of the industries. Evaluating 21 parameters for selecting an insurance company. List of key parameters for negotiating each type of insurance policy, and activities including unethical that can affect business adversely vis-a-vis insurance. What all are at risk and who all are at risk? Human beings are at risk. Risk can be to end products, working process and raw materials. Risk can be to equipment and other assets like furniture, etc. Any other assets, buildings, motor vehicles, cash or money or profits, and buildings. These are the broadly aspects which are at risk in any organization. Now, list of 8 activities for deciding which type of insurance policies to be taken. Now, uh, steps suggested are: number one, CEO and CFO nominating a cross-functional team of appropriate members, such as competent manager from the corporate finance and accounts, a risk manager, professional from the concerned functional team who need insurance, and inviters from other functions like internal auditor or legal professional or insurance consultant advisors as required. Number two is CFT and CFO preparing a risk analysis note highlighting the type of risks likely and the type of insurance policies to be obtained, tentative sum assured, estimated premium and duration, etc. Third is CEO, MD, CFO identifying a senior level person with a role as an insurance coordinator across the company. Fourth is insurance coordinator preparing and floating RFQ, request for quote, obtaining quotes and making comparison of the offers, negotiating along with the nominating negotiating team members like from finance or from purchase function. Negotiating the risk coverage, the add-ons, the premium charges, the discounts, and make a approval note for seeking approval, financial approval. Then CEO MD approving the insurance policy coverage, add-ons, estimated premium amounts, duration of the policy, or suggesting any changes. Point 6 is the insurance manager and the negotiating team obtaining a draft insurance policy, review this vis-a-vis management's approval note and requisition F&A for premium payments, and coordinate other insurance related matters with functions and insurance company or and broker. Seventh point is the F&A team reviewing the draft insurance policy, asking for the amendments if any, release the premium, obtain the insurance policy cover note, and give copies to all concerned teams. And last point, eighth is insurance manager monitoring the execution of the insurance policy and providing periodic data to insurance company related to the risks, any changes, sum assured changes, timely premium payments, renewals, renegotiations, and maintenance of the insurance policy. Now, what are the different 18 types of standard insurance policies which are by and large applicable for most of the industry? These are for the human beings: medical health policy, GPI group personal accident insurance policy, director and officers policy, T&O policy, key man insurance policy, professional indemnity policies, and common for human beings and all physical assets, CGL policy for the business premises. It is called commercial general policy. Then policy for the end products like commercial general liability policy for end products, raw materials and WIP for raw materials, WIP and equipment and other assets, standard fire and special peril policy including stocks, materials, equipment and other assets, office policy for the completed buildings and like fire and earthquake policy, etc. Then for materials and equipment and other assets in transit, marine policy. 11 is for the cash insurance policies, and next is the 12th is the profit loss of profit policy. For the equipment, there are policies like marine income erection policy, erection all risk policies, equipment breakdown policy. For the motor vehicles, motor vehicle policy. For the buildings, building awaiting occupation policy, and buildings and the real estate industry, primarily the CAR policy, which is contractual all risk policies, which is for building under construction. So just to sum up, there are different type of policies. This slide is primarily for the human beings related policies. This one is for the end products and raw materials, etc., and cash and profit. This slide is for the primarily for the equipment, and then motor vehicles, buildings, whether fully occupied or under construction. Now, there are primarily 21 parameters for selecting an insurance company. These are insurance company leadership rated 7 points, financial strength 2 points, policy coverage and policy features 5 points, customer service rated 3 points, and other factors 4 points. Now, leadership rated parameters. Now, while selecting and before selecting an insurance policy, the the team needs to review whether the insurance company to be obtained is government company or bank type or private or overseas entity or a JV of that. Number 2 is the market share in the insurance overall and in the specific type of policies which we want to take. For example, we are looking for a car policy. What is the protection insurance policy? What is the kind of market share this company is holding? Then claim paying history of the insurance company, claim settlement ratios, network of the reputed hospitals in the preferred cities. This is primarily for the medical and GPI kind of policies. The network of reputed hospitals, the network of reputed TPA, third party administrators in case of outsource by the insurance company for pre-authorization for hospitalization, efficiency aspect related to the TPA, particularly for the potential hospitalization during odd hours. Now, financial strength related, there are 2 parameters. One is the overall financial health and revenue and profitability of the potential company, insurance company, and the credit rating if available, and so on. 5 parameters which are regarding the policy coverage and features. What are the policy options being offered by the insurance company to meet the company's needs? Coverage limits and deductibles. Training for the loss control programs to be provided by the insurance company to the insured, risk management assistance, and online claims reporting processes. And 3 parameters for the customer service, primarily claim processing efficiency and ease, customer satisfaction assessment based on the independent reviews by taking feedback from the other clients of the insurance company or past experience, and customer service team's response time to the any queries including the claims. Continuing, insurance company reputation, the other parameters, insurance company's reputation, industry standing, innovation and technology for better service and efficiency, brokers and TPS competency and relationship with the insurance company, and the most important aspect, the ethical reputation of the authorized brokers and surveyors and TPA which will be engaging with the company. Now, list of the key parameters for negotiating each type of this 18 type of insurance policies which I mentioned earlier. The critical parameters are: number 1, risk coverage required to be negotiated, basic premium rate for the insurance policy with the standard exclusions, premium rates for add-ons, discounts on the premiums, duration of the policy, sum insured, the formulas for variations in the sum insured during the tenure of the policy, the premium rates in case of an extension of the policy period, deduction rates and amounts in case of the claims payable, and payment terms. Author plans to share these for vis-a-vis each type of this 18 policies in the future presentation, and these are very very important, and these need to be negotiated vis-a-vis each policy. Now, activities that can affect business adversely, including unethical. Not capturing all potential risk comprehensively or not declaring these entirely to the insurance company while floating the RFQ, request for quote. In the RFQ request for quote, stating sum insured inaccurately or on a hunch basis other than based on the actual from the MIS or financial books, or on the first principle basis or logical basis. Third is making incorrect comparisons of the selection parameters for shortlisting insurance companies in collusion with the insurance company or their brokers in return of favors. Not analyzing the standard exclusions offered by the insurance company versus the insured company's requirement. Not proposing policy add-ons uniformly with all bidders, thus making the comparison skewed in favor of insurance companies offering kickbacks. Not reviewing the changes in the sum insured, risk changes, or policy duration, etc., for seeking policy amendments. Now, future references. For more details about risk assessment process, there is a separate chapter dedicated in my book, second book titled Profitability and Ethics: Essential Ingredients for Business Success. The book has been listed on the Amazon as per the links which are stated in this slide. You can also refer to several of the blogs of interest on my website, whose coordinates are www.ethicalprocess.com. You can also refer to some of the articles of interest to you on my Facebook and LinkedIn. The coordinates are given in these slides. Thank you very much.